So if you aren't aware by now, the Coronavirus AIDS and Relief Economic Act, our CARES Act, is about a month old. And in that month's time, a lot of things will start to happen, a lot of wheels started to turn, primarily in the private, small business and student loan sector. In this post, I wanted to dive into one primary thing that you should have done about a week ago that can alleviate a lot of stress if you're going through economic hardship right now. It's dealing with a lot of student loan forgiveness and going into forbearance. So in my next few posts, I'm going to dive deeply into what the CARES Act has to do with our student loans and what it's doing to affect us and all the millennials and people who have student loans compounding. You can do a few things right now that you couldn't do a few months ago that really make an effect on your life and have a positive effect on your finances to help you get out from under whatever financial situation you're in. So what I want to do is I'm going to divide it into a few smaller posts that makes it a lot more easier to digest instead of putting everything jumbled up into one big post. This post is going to deal primarily with forbearance and deferment, and mainly what's called an administrative forbearance. So if you're unaware by now, all public loans that have been funded through the Department of Education are automatically gone into what's called an administrative forbearance. Now what that means is if you have loans pending, if you're making payments on those loans, they've automatically been halted until September 30th. Now what that also means is if you hadn't gone into this administrative deferment and you do have loans funded by the Department of Education, you need to contact your loan servicer and be certain that you qualify, because there's a lot of things that affect whether or not you qualify. I'm going to go over a few of those right now in this post. Like I said, I'm going to try to keep this concise, about 10 minutes or less. And then we're going to talk about the regular deferment and forbearance in another post. So under regular deferment and forbearance, as I previously stated, what happened is you would contact your loan servicer, tell them you're going through whatever hardship or whatever situation you can't make payments on your loan. And what they would do is stop your payments for a period of time, anywhere from 3 to 6 months, but the interest would still compound. So you would still have to pay interest on those stopped payments. What an administrative forbearance allows you to do is have the ability to completely halt interest and your payments. So if you're owing money right now, if you're making consistent payments on your student loans and it's funded by the Department of Education, then you don't have to pay right now. You shouldn't be. It doesn't make any sense. So now I'm going to talk about a few facts, things that are going to hold your interest that you want to be sure of before getting to this idea of thinking that you don't have to pay for your loans right now. These are things that could affect you to where you may have to pay, or that you need to make sure that some changes haven't happened that require your attention. The first thing that you need to understand is that if you have private loans, you may not qualify for this a little bit or even at all. Some of the larger private loan company services do allow now a hardship forbearance, but all of them are still compounding interest. None of them are halting interest completely. None of them have to adhere to the administrative forbearance guidelines. So even though, for instance, I have SoFi as my private loan servicer, they have also offered an option to forbear your student loans for a number of months, but the interest still compounds. So you need to be aware that if you're taking out $50,000, $60,000 in loans and you are at 3-4% interest, if you defer your payments for a matter of 6 months, that can be anywhere from $1,500 to $2,000 worth of interest that's still going to compound and extend the life of your loan. Also, this one's for the deadbeats. If you haven't been making one single payment on your student loan since you graduated back in 2009, if you are in default on your student loans, you need to pay that money back. You are not in deferment. You can't defer something that you hadn't paid back in the last 3 years. If you're in default, if you owe money to the government, if they say you owe for your student loans, you don't have the ability to defer anything right now. All you can do is set up a payment plan, because I'm pretty sure they've already turned you into collections, and try to arrange to pay back what you owe up until this point, and then they may talk. And while I'm on the subject, that leads me to another thing. For the life of me, I can't see why you would do this, but if you are one of the people who have taken your public finance student loans and refinance them through a private vendor, why you would do this, I don't know, but you do not qualify for administrative forbearance. Even if you refinance for a lower interest rate for a better company, you should not be taking your public stipulated subsidized or unsubsidized student loans and refinancing them through a private loan service. I don't care if there is zero interest. They do not have to adhere to the same guidelines. They do not give you the same protections as a public student loan. So if you have, don't do it again, and if you haven't, then don't do it at all. Alright, I'm going to piggyback off that and go right into federal family and education and Perkins loans. These are kind of a mixed bag. These you really have to look into your literature and see the guidelines of your loans and see how they're set up, because some of your institutions may have provided your Perkins and FFEL loans. So you definitely need to check and be certain that if you are a person that's receiving a Perkins or a family education loan, that it's provided through the Department of Education. If it's provided through your institution or it's provided through a private company, you may not qualify for this administrative forbearance. You may be required to continue on making regular payments on your loan. Perkins loans is less likely to be through a private servicer, but it happens. So as I previously stated, you got to check. You have to be responsible for making sure of this and not expecting them to automatically do you that favor of putting you into forbearance for your hardship. Alright, so that's pretty much what I wanted to cover today. Like I said previously, I wanted to keep this under about 10 minutes. My next few videos, I'm going to delve into deferment and forbearance officially. Also, a few more things to deal with the CARES Act, because it's rolling along and you're going to miss the wave. Honestly, it's making a lot of people who are in that millennial middle class tweener financial situation. We can rebound from what's going on right now, what's happening right now, with the combination of schools being closed, so you're not paying for daycare, also not having to pay your student loans. You can put that money towards your credit card debt, and you can get out of credit card debt a lot quicker. Also, if you got a car that you are done paying for, you can free up a few $1,000s and go ahead and pay that car off. I did not mention earlier that even though you are not being required to pay on your public student loans, you can still log into the website and make payments. Now what that does is it automatically puts your payments towards your principal, therefore decreasing the life of the loan. So if you are a person, maybe you're not expecting to get loan forgiveness, you're completely trying to pay off your loans completely, right now you can make all your continued payments and that would go directly towards your principal and shorten the life of your loan. So that's an option to think about. If you have any questions, of course, don't forget to comment below, like, share, and subscribe. Here's the life.